Hi guys, notice anything different? Maybe a different background, perhaps? We got the dogs here, one dog, two dogs. Yes, I am in Sedona for a few days, enjoying this beautiful Airbnb, trying to relax a little bit, but also doing some work. And of course, not going to miss my update for you all this Monday. So you get to benefit from seeing the beautiful background this week. Do me a favor and comment below. Let me know if you've been to Sedona and if you have anything fun to do here while we're here that we should take advantage of. I'd love to hear from you on that. So let's talk about the market. One thing I want to address at the beginning is good news for employment, as that goes hand in hand with real estate in a lot of ways. Arizona has recovered 94% of jobs that were lost during the pandemic. So that is an excellent thing to hear. That is leading as compared to other states in the US. So yay, Arizona. I don't have data specifically on Phoenix, but at least we know our state is recovering very well. So that's great news. One thing that happened last week is our supply did not increase. And this has been increasing week over week for a while now, but not last week. So we'll see why that is. I don't know if that's going to continue or not, but that was an interesting change from last week. A couple weeks ago, I talked about affordability and how our affordability has finally fallen out of the affordable range when we look at home prices in Phoenix. And this is based on the home opportunity index, I believe is what it's called. And so when it dips below 60, that means we're not, we've fallen out of the affordable range and we're at like 56. So not very low, but it has fallen out of the affordable range technically. So I talked about that a couple weeks ago. Well, what's interesting is if our affordability goes down, you would expect our buyer demand to also go down, right? But it's gone up. So why is that? We don't know for certain. But what the Cromford report has been looking at is data for iBuyers. iBuyers are your internet buyers like Opendoor, OfferPad, Zillow, those types of companies. And they have increased their purchases significantly. And they are also selling a lot of these homes to investors that don't intend to occupy them. So our buyer demand has gone up probably because of that reason, and we do have a lot of investor demand right now. Likely because rental rates are high, also folks buying for Airbnb purposes because we're a great tourist location for that investment. But it's interesting to me because if you're an investor, you're usually trying to get a deal, not necessarily buying when prices are so high. Regardless, there's a reason for them doing that, I guess. So that's some interesting information that that I got this week. So that'll be something that we need to watch. Interesting that affordability goes down, but demand goes up. One thing that I think may be affecting that, just my own theory, is we do have a lot of folks purchasing here from out of state and coming from states such as California, Seattle, areas on the East Coast where home prices are higher than here. And so when you buy in Phoenix, it's not so much sticker shock as it is compared to the local folks here. So I know we still have a lot of inbound migration from other states, especially these states where home prices are higher than ours. And so my assumption is that demand has continued to stay strong because we do have a lot of folks relocating here and the prices aren't going to scare them away because it's probably still cheaper than what they're used to depending on where they're coming from. So we'll have to watch that. But let's talk about the CMI, which is the Cromford Market Index. If this is your first time to my channel or watching these videos, I get all of this information from the Cromford report. I am a subscriber, and what they do is analyze data in the MLS for Phoenix specifically, and they extrapolate that into charts and graphs and algorithms and all of this great information for realtors. that realtors can then use to share with their clients. So I make these videos every week based off of the Cromford report updates and share that information with you guys. So I'm not making any of this up. I do have a great source of information, and they are excellent. So I just want to say thank you to them. But one thing that they have is the Cromford Market Index, which is an index that they've created that helps us understand supply and demand in our market. And if this index reading is above 110, it means we're in a seller's market. And if it's below 90, we're in a buyer's market. Have not seen below 90 ever. So just get comfortable in a seller's market. We are sitting this week at 348.7. Months ago, when I was talking about this, we were in the 500s. So we have come down quite a bit, but we are still so far into a seller's market that, like I said, just get comfortable. We're not anywhere near a buyer's market or balance right now. This number has been going down, but it only went down 22 points at the rate of 22 points per month over this last week. And previously it was moving 30 points per month. And before that, we were talking about like 50 and 60 points per month. The reason this has slowed is because our demand has gone up and our supply has stayed the same and not increased. So this is exactly what was happening months ago when the CMI continued to increase, because we had a situation where demand was going up, supply was actually going down, and so we were moving further in the direction of a seller's market. So that's where we're at as far as the CMI is this week. For our supply, we're sitting at 31.3, which means that we are about 69% below normal. For our demand, we're sitting at 109.2, which means we're at 9.2% above normal. So demand is above normal, supply is below normal, hence seller's market. So that's where we're at with the CMI. We'll continue to watch this and see if it kind of hangs out there or if it continues to go down. It's certainly slowing in its trajectory downward, which is something we didn't necessarily anticipate. We thought it was going to be moving towards balance pretty quickly at some points, but now it seems like we're just hanging out a little bit. So we'll see what happens. One thing I did want to mention too is I know the CMI is kind of hard to understand, and I talk about this every week. So if you don't follow it every week, it might be new and a little bit confusing or overwhelming. But another way for me to help you understand where we're at in our market is the contract ratio. The contract ratio looks at how many homes we have listed for sale active and how many homes are actually under contract. And so for the longest time, we've had more under contract than available for sale. And right now we're sitting at about 10,000 under contract and 6,400 available for sale. So you can understand, as a buyer, you don't have as many options for sale as are already under contract out there on the market. So if we look at those numbers, that gives us a contract ratio of 161.2. If we go back in time to 2018, 2019, pre-pandemic levels, that contract ratio was about 70. So we can kind of base that as, knowing that that was still a seller's market, but not a complete frenzy. Knowing that 70 as a contract ratio is a little bit more normal. 161 is pretty high. So just another way for me to kind of describe that, help you guys understand where we're at in the market in Phoenix right now. And that's all I got. I got to go back to relaxing or catching up on work. Who am I kidding? I'm definitely working while I'm here. But I appreciate you guys watching. I hope you enjoyed the new background. The dogs are here, but they seem to be just chilling, which I'm not going to complain about. So sorry they weren't too much of an appearance in this video. I'll be back later this week with a new video, and if you have any questions, you can reach out to me anytime. Call, text, or email, or click the link below to set up a time to chat. Thank you for watching. Make sure you subscribe if you're not, and I will talk to you guys soon.